This is Rod Kusanen, Spooman, for a risk on September 20th, Sunday, 2009. We, in conjunction with our future market crash of 2009 video series, are reporting to you a piece of information that we uncovered over the weekend. We went back to October of last year, 2008, and found in the December 2008 ES contract an unfilled gap at 1107.50, 1107.50 in the December 2008 ES contract. Now that gap, which you see here, was a gap from the close on the 3rd of October to the open at 1700 hours on the 5th. That gap has not been filled. Now, contracts have changed, of course. When we use TradeStation's blended contract, continuous contract, here's where it places that gap. It places that gap at 1095.25 using a recalculation method that TradeStation has come up with. Now, we are not saying that we're going to fill that gap at 1095.25 before this market goes down. We're just saying that that gap exists. We also know gaps are always filled. Whether the market will run up to this level or not, I can't say that. It might. We may see a continual rally, and given that we've gone very close, within roughly 25 points of that high, it's conceivable before we see the market continue, or the market finally turn and begin to drop as we are expecting. But this week could be a very significant week. So we're just informing you. We are aware that there is a gap up there. Whether the market turns and continues to rally up, we don't know. It might. Given as close as we are currently. Another significant fact. This is a daily chart, by the way. A daily chart. We noticed a gap at 899.50 on a daily ES chart that takes us back to early part of July. Interesting. Very interesting. So the current gap above the market, let's just place it on this chart. That's pretty close. 1095.25. That's where that current gap is. Okay, previous gap down at 899. Let's take a look at the DPO on a daily chart. Now, in placing a DPO on this daily chart, we notice that the DPO has been divergent since the 17th. On the 17th, it went divergent when it hit the high. And the high, as you remember, was at 1071.50. Our gap is at 1095.25. That's close. we're now going to superimpose the 1 minute VIX on this chart. Or pardon me, I meant a daily VIX on this chart, and we'll put the DPO, I'll change the DPO to plot on the VIX. Okay, there we have it. And interesting, the VIX. The VIX is starting to move up. We did not hit a new low on the VIX on the 17th. The DPO on the VIX has been divergent. So it's divergent on the ES, it's divergent on the VIX. And the type of divergence that we see on the VIX is a type 3 divergent. Go to our website, RSKsys.com, read about type 3 divergence. The VIX itself is divergent. It has not gone as low as the low was on, verify that date, the 11th. It has not gone back down that low. Now I want you to take a look at the VIX on a 1 minute chart, because what happened this past Friday was really surprising. On this chart we're plotting a 30 tick bar VIX. Okay, so this is a very slow tick bar. But you notice the gap that was filled on the VIX on Friday. Right here. Okay, gap was filled, a couple of ticks later, market turned. Gaps are always filled, and when they do, oftentimes it is accompanied by trend changes in the market. We don't lie. There's the proof. Let's drop the tick bar interval down to 20 and see if we have any other gaps. None at 20. We've got a gap here unfilled at 23.68, but a gap up here at 24.34. Let's drop it down a little bit further to our standard 7 tick bar chart. That gap remains at 23.63. However, we have another gap at 23.32 that was created early on Friday morning. That's the gap that we're looking for tomorrow. So, just a couple of things as a heads up for tomorrow. We do have some gaps down here at 23.32. Nothing below that. So that's a possibility for tomorrow morning, as well as the gaps above the market. So primarily what we're concerned with is the major ES gap at 1095.25. Let's keep that in mind as we continue to watch market activity during the week of September 21st, 2009. This is Rod Kusin and Spooman for Risk.